Trump seems to be waging a trade war on the world through tariffs, as they were recently released just yesterday, and we're talking virtually every single nation from Zambia to Nepal to Kuwait, and the list goes on. It seems he's waging war on markets through a bold approach, but it's causing a lot of unpredictability and uncertainty. And now it seems he may even be potentially waging war on the Fed. This has many market participants and crypto investors pissed off as they've struggled to recover. Trump promised a golden age of prosperity for the US and crypto, but so far Trump's idea of the golden age was likely to crash the market, or at least that's what people think, within his first year, and he's doing a good job as the entire market essentially peaked on his inauguration day and has been dumping ever since. But maybe that was a part of the plan and what needed to happen all along. You don't get radical changes on small actions. A total reset of our current economic and financial system might be at hand. True transparency about where our tax dollars are being spent, removing waste and fraud, which is painful and going to come with a lot of negative headlines. Updating archaic paper infrastructure, which is crazy in this day and age, to computers and even blockchain, which will hold our government officials and unelected people accountable, alongside implementing rigorous systems of approval. Every single day, the rich have been getting richer and the poor and middle class have been getting poorer as inflation remains unreasonably high. And we're talking to the tune of 26.6% and has consistently been climbing. Many people believe it's because of tariffs. But this aggregate rate of inflation is completely unsustainable. The economy isn't working for the middle class, and their wealth is continually being robbed because they have to spend more in order to live the exact same lifestyles, while wages don't continue to rise to the same degree. The disparity and gap between the top 1% of wealth in the nation and the other 99% also continues to widen. And we see this trend happen in virtually every single era of history where a nation rises to power and then collapses. Then you have millennials, the primary workforce, which can no longer afford to buy homes on higher wages, like that of Gen X and boomers when they were around the same age. Our debt has gotten so out of hand and crippling, it has incentivized many other nations to find creative ways around the US dollar, and the list goes on. This is completely unsustainable. And then if you're to top it all off, the Fed continues to make all of their decisions behind closed doors without true oversight from the American people or even elected members of government. As in this article, it even mentioned that Ben Bernanke, who used to be the Federal Reserve chairman, said we have to be extraordinarily careful that the markets and public don't think Congress is trying to influence monetary policy decisions. And current chairman of the Fed, Jerome Powell, even made a note of the fact that he would not by any means play the Trump playbook or rules. When asked if he could be fired or would resign if Trump asked him to, he responded no. The Fed can ignore Trump just like it ignores Congress. In other words, if our economic overlords really are independent of voters, we are living under occupation. In other words, it seems Trump is waging war on many things. And right now, the markets are one of the ways in which he's going to force the hand of the Fed to actually lower interest rates, which will essentially only happen if there is a market crash. And we're going to cover that in this video and what they've shared. As things stand, the current Treasury Secretary Scott Bessent has supported Trump in a statement, basically saying that the stock market sell-off is a Magnificent Seven problem, not a MAGA problem. The Trump administration is not watching the stock market, and investors are finally realizing this. So markets are just a few more bad days away from pure panic mode, and something where we would likely see a retrace similar to that of 2022 or even worse. which is why people like Scott Bessent are speaking up, because markets need a bit of reassurance from the top down. Otherwise, they'd likely puke. Everyone's a bit skittish right now. So the real question is, what will the real effects of these reciprocal tariffs be? Will we get a complete reset for the United States and cripple the Federal Reserve banking system? What's going to happen to crypto markets and XRP during this time? Well, let's dive into the video. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the channel, my friend. If you're new here, my name is Paul, and you can find me on Twitter or X at PauliDeFi. PAULIEDEFI. I want to cover this post from the Kobisi letter first and foremost, explaining the relationship and what's happening between Trump, Jerome Powell, and the Secretary of the Treasury, Scott Bessent, which basically came to the same conclusion as inflation and arguably the compound rate is still unreasonably high. And because that's the case, and because we haven't really seen labor or better yet unemployment spike, Jerome Powell and the Fed, which do hold closed door meetings and have been relatively defiant of Trump and his wishes, have kept interest rates pretty high. We were expecting multiple rate cuts at the start of this year. We did not see that. We only saw just one or two, and then things have remained the exact same, which has actually really pressured capital markets. In other words, they've all agreed upon the fact that a recession is the only remaining way for inflation and rates to fall, and this has actually caused a decline on the 10-year Treasury. Now, it's important to note that the 10-year Treasury and the yield that it has earned has been upwards of 4.2% since back in 2022 and has remained in this range till present day. This is a weekly chart I'm looking at right now. Well, as of today, it really started to collapse a bit, and let me go ahead and get out of the way so you can see. Right here, down to 4.04%, and actually over the last couple of days, it's collapsed quite heavily, and now we're starting to put in this pattern. Now, I don't like to use patterns for bonds and yields in particular, but it does tell us a story. And the only reason that this would collapse, and there's many reasons. This is a very dynamic market with a lot of very smart investors with a stupid amount of money, and arguably governments too. But at the end of the day, it's because they would rather fly to safety and they would demand less interest on their bond if we were actually going to witness the market collapse or crash. In other words, if this thing went down to like 2%, it's because it's likely because investors are making flight to safety, or better yet, looking for a safe haven and demanding less interest to hold a government bond and debt. However, I did find a very interesting post from a gentleman by the name of James Thorne that said, folks just don't get it. Rates are declining and Bessent is a happy man. His true North Star is the US 10-year Treasury yield, not the Fed. Tariffs will eventually force the Fed's hand, and that's exactly what Trump is trying to do, because he wants the market to crash in order for them to lower interest rates, right? We couldn't live on this dopamine hit of cheap and easy money with really high interest rates while the average American suffers for too long. To which he says, let the crazies in the equity futures have their fun. The real information is in the credit markets. The US 10-year is about to break 4%, which would be very bearish in the short term, but potentially bullish in the long term. But if there's one thing we know, it's that Trump and Jerome Powell really probably don't talk much, if at all. They don't like each other. Jerome Powell likes his power over in the Fed, and Trump, right, likes his power as president of the United States. Trump told Jerome Powell to cut interest rates. Powell didn't do it. Now Trump is trying to force Powell to cut interest rates by crashing asset prices. We will see who blinks first. To which a gentleman by the name of Thorolf said, since Powell doesn't want to take recommendations from the executive branch of the US government, Trump has a sufficient majority in Congress to dissolve the Federal Reserve. And that is currently true. However, I think it'd be virtually impossible, at least in the current state, and instate a new system that functions in the interest of the American people. Now, wouldn't that be really cool, considering the Fed has been around since 1913, and all we've seen is more and more taxes and a devaluing or debasing of our currency since that point in time. And as you can see here, since the inception of the Federal Reserve banking system, there's a really interesting book called The Creature of Jekyll Island that explains how sinister the story is behind the founding. However, that's a time for a different call, or a topic, I should say. However, this was the dollar, right? At the inception of the Fed, you can see there was a really stark crash and a collapse in the 20s, and then it increased through the 34, and ever since that point in time has been on a consistent trajectory to the downside. And this downtrend, and this was, by the way, data according to the St. Louis Federal Reserve in 2018. Since this point in time, it was at just under 10 cents to the dollar. We're probably sitting at closer to 3 to 7 cents on the dollar right now. In other words, there really is less purchasing power because a dollar is worth less. In other words, you get less for the dollar that you spend. That's what inflation is. And this is the debasing of currency because of quantitative easing right now, especially, which we haven't just seen yet. But if you control the dollars and you control the interest rates, then at the end of the day, you control the people. Now, speaking of those tariffs and using it as a tool to essentially make the Fed get on its knees and beg for mercy, or at least change their trajectory and their approach to the markets, there is an article from Ray Dalio, highly recommend it, called The Effects of Tariffs and How the Machine Works. He's one of the most educated men in markets, in my opinion. I've read virtually all of his books, and he shares some really unique information in the fact that tariffs are taxes, and here are the reasons that they are applied and how they work. We're not going to dive into every single one of these things, but really where this thing really matters, and it depends, is on how those tariffs are responded to by the tariffed countries. But since we've already had higher tariffs in most of the countries, we're simply imposing equal or lesser tariffs on them for fairness. And in this case, markets aren't going to like it. Other countries are definitely not liking it. And so they are going to have to respond in like by either lowering or removing their tariffs, like Israel recently did. And I know that's a hot topic, but they really did. Or they're going to face the consequences of losing a lot of business in the United States, or anyone that was doing business in their country will now bring manufacturing and jobs back to the United States. So it really is one of the most powerful bargaining chips that Trump has, not only for the Fed, but for fairness in trade worldwide, to the point where now we are no longer dependent on other countries. So obviously there is no clarity around what's going to happen in the future, or the background is what he's saying. But at the end of the day, we had a dangerously unsustainable monetary, economic, and geopolitical situation. And so although I could talk more on this article, at the end of the day, the production, trade, and capital imbalances, most importantly the debts, and that's exactly where we were at with $36 trillion of debt, must come down one way or another. And Trump's goal is likely to bring everything down, and the markets are going to have to suffer in order for this change to occur. So much so that just recently, this post kind of caught my eye, that from 1789 to 1913, we were a tariff-backed nation. In other words, we charged taxes for companies to do business and import into the United States. We were so wealthy, and then they decided what to do with the extra money. Trump said in his address yesterday. In other words, Trump is trying to take it back to pre-1913. By the way, 1913 was the Fed and the year that it was formed. And so there are very negative outcomes, but there are also positive outcomes. And we're going to talk about those negative outcomes right now, then the positive. And it's the fact that these reciprocal tariffs, and the moment they were announced, caused markets to sell off. In just 15 minutes, $2 trillion of market cap was basically erased from all of the major market cap companies in the world, and also in crypto, which we will cover on the price action chart. But on a more positive note, if our government is no longer recklessly spending and not really tracking or auditing just about anything, which we hope to do and hope to have done with these systems from Doge in place, the Trump tariffs will bring in $600 billion in just the first year to the Treasury General Fund. In other words, imagine if we could actually fund our nation and our debts with tariffs. And at the end of the day, it brings more jobs and companies back into the United States and creates a more free and fair trading situation with all of the players worldwide. Then, if you took that and also instated a situation where we no longer had major taxes from the federal government, the White House have said that Trump will provide the largest tax cut in history, which is absolutely insane, because there's never been a time in my life or anyone's life on this video that is watching right now, whether you're 90 or my age or younger, where taxes haven't consistently risen over the last 100 years. Well, if this is going to be the largest tax cut in history and the federal government is actually being profitable and no longer having to siphon money from taxpayers, this could be one of the craziest things to ever happen. Again, in the short term, we're likely in for some more pain. But in the longer term, things can look really good from an economic place, especially if the Fed actually has to lower interest rates in response to a market crash. So really quickly, let's dive into the price action, folks. Right here, I have the price on XRP. And again, as you can see, we are in consistently an intermediate term downtrend. As I've already made note of in prior calls or videos, I should say, this right here was a bull trap on the Trump pump because we sold right back off into new local or range lows shortly thereafter. Then on arguably one of the biggest days of news right here on March 19th, where the SEC was going to drop its appeal, the market really failed to put in another range high above $2.60. And because it failed to break out, we had a double top here, leads me to believe that we were going to go lower. So I've been calling this play consistently, and I got a lot of hate for it, and I understand, because no one, again, likes a bear on YouTube talking about a bag they might hold. But at the end of the day, XRP is not immune to market environments or circumstances at a far higher level with far more money, and we're talking about the entire stock market to the tune of $100 trillion or more. So that said, right, crypto is relatively small. XRP as an asset, even though it's a good technology, is also small. And the fact that we are now touching the $1.95 range here and broke down, and arguably even on the daily, as you can see, before today really came in, and I'll go ahead and do this little bar replay right here, you can see that not only did the market rally really hard today, but then immediately dumped shortly thereafter. So we did have a larger wick to the upside to break for a new range high above 220. XRP pumped all the way up to 223, but in that same period of time dumped right back down to 198 and closed at $2.02. And all we've seen is growth in sell volume. If I come back to, let's say, that hourly time frame, you can see that we had tremendous sell volume and profit taking right here. And I would argue that this is one of those sell the rip type moments where when the market started pumping pretty hard right here, there were a lot of people waiting to get out on XRP. And not just XRP, this exact same thing happened across the board in major markets and even in Bitcoin. And by the way, this is the price action on Bitcoin. And as you can see, massive sell volume on Kraken alone to the tune of $66.9 million. And on something like, let's just go over to Binance in a single hour on this one candle had sell volume to the tune of $669 million. If you were to look at the daily time frame, that one single day had about $3.2 billion of sell volume. And guess what? Again, a pump right up to about 88,000 and a dump. In other words, people are selling that rip. But what leads me to believe that we're going lower, and I've been sharing this over and over and over on the channel, again, it's got me a lot of hate. That's totally totally fine. So far, I've been right. Right is the fact that we had one touchdown right here, or I would say a resistance, right? Then another resistance right here, and yet again 3 and 4. And by the way, on the fourth, massive sell volume. This leads me to believe that if we come back down to that 195 range, we are going lower and likely to the tune of at least 150, and probably even below that, considering this head and shoulders has officially closed. We're in a range now where, let me just go ahead and pull this off. So not only do we see resistance there, we are back here. And by the way, this is again shoulder, head, shoulder. A breakdown's likely going to take us to about 150, and again potentially even lower to like 110, considering that's our next major range of support going back to 2021. But because we have so much room and space to cover here, things are not looking too good for XRP. And that's not me giving you financial advice or telling you to sell all of your, crypto or whatever, but I really am not feeling too good about the current economic environment and situation, especially with volume like this. So anywho, that's it for the video, folks. And if you enjoyed it, be sure to head on over to bullrunners.com. You can find the link in the description below to get access to Altcoin Pro University. I just hosted a live call where I explained everything on the charts and how to think about them. We've gotten into plenty of technical indicators and how to approach markets from the charts. I do live calls that are only for those university members, and I answer questions live as well. So if that sounds interesting to you, head on over to bullrunners.com to check out Altcoin Pro University, and you're also going to get all sorts of other things like DeFi yields, airdrop alerts, altcoin picks, how to avoid getting rugged or scammed, how to get ahead of trends and narratives. There are tons and tons of guides and posts and all sorts of other great content and value. We have over 1,000 members that are paying to be here, and for good reason. It's because this is bar none the best platform and tool on the planet to help you reach your crypto goals. So again, if that sounds interesting, head over to bullrunners.com. You can find the link in the description. Thanks so much for watching the video, my friend. I appreciate your time, and I will see you in the next video. Goodbye.